Welcome back to the channel, everyone. Today I want to talk about how the stock market is done for, how the stock market collapse is only just beginning, and how many large banks like Deutsche and JP Morgan are already turning to crime. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, if you forgot about the Chinese property crisis, below the US dollar denominated bonds are 5 of the largest developers in China, with combined reported liabilities 3 times larger than Evergrande, but the true extent of their liabilities are unknown. You can see here, after September 2021, many of these bonds started to fall off a cliff. Now, when the Evergrande default was announced back in December, these bonds didn't perform a U-turn and shoot straight back up again, they've continued the decline. And the last bear standing says last September was the first broad panic in the sector, followed by months of deterioration masked by happy headlines. In the past 3 weeks, property stocks and bonds are continuing to collapse. The Hang Seng Index is in freefall, taking out the pandemic crash lows. You can see here, during the pandemic, the Hang Seng Index fell from around 29,000 to around 21,500. It then rebounded back up in early 2021 to around 31,000. This has now since fallen to 20,235, below the pandemic lows. I personally believe that this contagion is likely to spread to other markets in the UK and in the US, and this could be a sign of exactly what's to come for the S&P 500. Sunak, one of the largest property developers in China, highlighted at length here, is now down 50% in the last 3 weeks, including being down up to 9% on Friday, bringing its total drawdown to 89% from its 2020 highs. Sunak, one of the largest Chinese property developers, isn't behaving like a blue chip stock, it's currently falling like a SPAC or a fraudulent company. Country Garden's US denominated bonds, which are currently rated AAA investment grade by Fitch Ratings, traded from 97 cents on the dollar back in September to now just 56 cents on the dollar. Many of the large banks and institutions holding these Country Garden bonds are still able to use these bonds at full face value for their margin requirements. But it won't be long until these bonds are downgraded or end up in D for default and end up becoming worthless. This is likely to trigger some very large margin calls across the entire US banking sector. Meanwhile, in US equity volatility, looking at the VIX, the mode of transmission between Chinese and US markets that the last bear standing suggested continues to rise to the highest sustained levels since the pandemic meltdown. Since November-December, the VIX has been consistently setting higher highs and lower lows, and will soon likely be taking out those highs from July and November of 2020 before potentially rivaling the pandemic crash. The final domino, the one that separates an economic slowdown from a financial crisis, is banks. He's written at length about why he believes the property spiral could create a banking disaster, as the contagion in the Chinese property market is likely to spread to large Chinese banks, which will then spread across to large US and UK financial institutions. In the pre-market this morning, Sunak is down 20% today, and Country Garden is also down 19% today as well. Country Garden has also released a public statement saying that the entire reason for the stock's decline is due to negative sentiment and negative comments here on Twitter. Now, I think this also goes hand in hand with skyrocketing prices in world commodities such as oil and ammonia. Obviously, ammonia is very important, as it's one of the base ingredients in crop fertilizer. The price of ammonia has gone up by a multiple of 5 since December of 2020, going from $200 per tonne all the way up to $1,300 per tonne. Guys, if you didn't already know, Moomoo and Futu have just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. With Moomoo, you can currently get 5 free shares valued up to $3,500 each, and a guaranteed free share worth up to $20 when you sign up using the link in the description below and make your first deposit. Moomoo is also a brilliant commission-free trading platform that has tons of technical indicators and advanced charting tools. Moomoo publishes daily short-selling data, position cost distribution, and much more. Moomoo is also incredibly easy to use and will help you to trade like a pro. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free stocks. Looking at the February inflation data, we can now see that CPI, or inflation, has risen to 7.9%, up from 7.5% in January and 7% in December. President Biden is obviously blaming this inflation on the Russian movements, but it's important to remember that this is the February inflation figures, not the March inflation figures. I expect the March inflation data to be even higher, potentially as high as 9% or above, after the Russian sanctions caused a number of different commodities such as oil, nickel and ammonia to skyrocket over the last month. Inflation is currently hitting a 40-year high at levels not seen since the early 1980s. I think if inflation hits that 9% or above level, then the market crash will end up accelerating. And Deutsche Bank is under investigation by the Justice Department for laundering $10 billion worth of funds from Russian markets and is still exposed to 2.9 billion euros. But it's not only Deutsche Bank, it's also Goldman Sachs. Carlos Trade says, "I'm so disgusted with the current system. Goldman Sachs has been caught using a legal loophole in the recent Russian sanctions to sell Russian debt to US hedge funds, cashing in huge profits." So not only has Deutsche Bank laundered over $10 billion out of Russia, but Goldman Sachs has also been selling off Russian debt to the highest bidder. As NBC puts it, they're acting as a broker between US investors and Russian creditors. Goldman is now advising investors to hide their trades by putting them in their own personal accounts to avoid scrutiny. Now, this obviously comes as a stark contrast compared to what Goldman Sachs has been telling the wider world, saying that they're winding down their business in Russia, marketing themselves very differently from how they're actually behaving. US officials sanctioned Russian banks, making it illegal for US companies to do business directly with their institutions, but yet Deutsche Bank is laundering money out of Russia and Goldman Sachs is selling Russian debt. But the worst part about all of this is that the Deutsche Bank CEO has said that their Russian exit would go against their values, so as compensation, he decided to pay himself an extra 20%. While the market is in a downward spiral and is evidently collapsing, the Deutsche Bank CEO decided to increase his pay by 20% to compensate himself from their Russian exit. But it's not only Deutsche Bank and Goldman Sachs, it's also JP Morgan Chase. Apparently Exempt just tweeted a quote from JP Morgan saying, "We're hiring thousands of individuals with criminal backgrounds into the workplace at our firm." And he says, "How very fitting. I'm sure they'll feel right at home at JP Morgan Chase." JP says labour shortage requires unconventional hiring, including people with criminal records. Now, obviously, people with criminal records are a lot more likely to hide fraudulent information and fraudulent trades because, well, they're criminals. This is the perfect excuse for JP Morgan to continue committing illegal activity and then just blame it on the criminals that they've just hired. They've said people with criminal backgrounds can face barriers to employment, said Lam. The bank, which had 271,000 employees as of the year-end 2021, has eliminated questions about criminal records from initial job applications. "We're hiring thousands of individuals with criminal backgrounds into the workplace at our firm. This is another specific example of what we're doing to make progress around tapping into the talent pools that have historically been left behind." I mean, it's likely that these talent pools have been left behind for a certain reason, because people with criminal backgrounds probably tend not to work very well in terms of managing people's money. And it also looks like this stock market collapse contagion is already starting to spread into the housing market as well. Here we have a chart which shows the 30-year mortgage rate and weekly mortgage purchase applications. Over the last few weeks, we can see the 30-year mortgage rate here in black has been plummeting, which should encourage additional mortgage applications, but yet mortgage applications have nearly halved in that same period. Those weekly mortgage purchase applications have here just fallen below those pandemic lows and is likely to continue falling past those 2018-2019 lows as well. So it looks like not only are we entering a stock market collapse, but we could also be entering a property market collapse as well. For 14 years now, central banks have fueled monetary systems with quantitative easing and low interest rates. But now the Fed wants to start increasing these interest rates and tapering that funding. And they want to do this not only on the brink of a stock market collapse, but also on the brink of a property market collapse as well. Guys, be sure to let me know down in the comments below what you think about the stock market being absolutely done for and the start of the market collapse. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.